George, WeTrust. So I'm going to start with our vision, because if there's anything to take away, it's going to be our vision, because 5 minutes is not quite enough time. But before we start, let's get a show of hands. Everyone who has experience using a bank account or insurance, raise your hands. Great. So you guys are not part of the 2 billion people who are unbanked or underbanked in this world, which is great, because that's a big problem in this world. And our vision is, before we start that, we ask everyone to imagine a future world where banks and insurance companies have aligned interests with their customers. Now, to understand the future, we need to understand the present. And I'm going to give 3 kind of examples of phenomena that kind of shape our vision. So first, if you don't have money and you don't have a credit score, you can't get a loan. You can't get money if you don't have money. So it's kind of a catch-22. Now, if you look at insurance companies, you pay your insurance premiums month by month, year by year, immediately. But once you get to accident and you want to get that claim, it's going to be a battle with you and the insurance company trying to get back what you feel you rightly deserve. And the reason here is because there's misaligned interests, right? There's a fundamental conflict in what the insurance company wants, what you believe is in your best interest. Because that money that will be paid out to you claims could be used as bonuses or big billings or advertisements for Geico, which ultimately don't deliver any utility value to your insurance claim as a policyholder. Now, another thing I want to point out is if you look at all banks and insurance services, you go from one bank to another, you go from one insurance company to another, and you realize that the actual product is not very differentiated. Sure, we can look at all the kind of actuarial models in the back and all the lending terms and different technologies they use to figure out what's the right interest to charge you, but ultimately it's a commodity product. And in technology, in manufacturing, commodity products have very thin margins. But for some reason, financial institutions have very, very healthy margins. That's very interesting. Is there an alternative? Because those margins are ultimately from the customers and policyholders. Now, the third thing I want to point out lastly is for the average Joe who does not have money, they're the 50th percentile, and they don't have a lot of, the prospects aren't looking very good. It's in the United States. The quote-unquote bottom 50th percentile in terms of wealth does not look very attractive, and the trends don't indicate any change. But this is not anything new. The United States is just reverting to what is common across the world. So the United States is nothing unique in that regard. Now, if these people don't have money and they don't have capital, how can they grow economically? And we believe there is a way, potentially, to leverage something that everyone has, which is social capital and trust networks. Everyone has social capital, their friends, their family, the people you trust, your community. Now, that sounds very kind of pie in the sky, but actually, it's being used around the world by over 1 billion people in savings groups called ROSCAs, from India to Mexico to Kenya to China. These are called ROSCAs. And what is it exactly? It's been used for about 2,000 years from the Han Dynasty in China. It has a lot of resilience and effectiveness in terms of generating credit and insurance for our communities. What is a ROSCA? It's a rotating savings and credit association. And what it is a group of people that trust each other, that agree to a fixed amount of money that they contribute in a fixed period of time, for example, $10 a month. And they agree on a framework on how to distribute that fund, those monies, to the individuals. And so ultimately our vision, to sum up, is to leverage social capital and incentives to create a collaborative savings and insurance platform powered by blockchain. That is the integral part of this piece of the puzzle, is where we can use blockchain for good. And ROSCAs is not the only product, it's only the first product which is used to construct a network of users, will allow the tethering of social media accounts and other government IDs to create a system of credit score. The biggest stumbling block of the unbanked and underbanked is the lack of an identity. How can I trust to lend you $100? So we didn't really talk about ROSCAs, but here's a very concrete example. So here in Thorpe, when 4 people agree to contribute $10 a month to a pot of $40, and then there's a bidding process to determine who gets the pot. And so this is used by 1 million people around the world, even if you're some people, you don't need to be literate to see the elegance of this product.
Okay, wonderful. I think we're out of time.